Good evening, everyone. Welcome to the webinar on Phoenix investment opportunities. My name is Garrett Stason, and I'm one of the real estate advisors and realtors here at Marshall Reddick Real Estate. Hope everyone's having a good day. I will be co-hosting tonight's webinar with Tanya Nord, who is our Phoenix, Arizona regional rep. So she'll be speaking a little bit later on after I kind of get some introduction done and go over what this presentation will be on tonight. It's great to see a lot of familiar faces and names on the webinar tonight, so glad you could all make it. I spoke with several of you recently, and I realized that we have a wide range of real estate investors. So people who are just getting started out in real estate investing, and also those who I've spoken with have multiple properties. So all is great. So over the next hour or so, we're going to cover the ins and outs of our Phoenix market and the reasons why it's a great place to begin your investment search. So I recommend right now, if you haven't already, taking out a pen and paper, as we are going to cover a ton of information that you will want to take down and implement. So I'm just going to click on the next slide here. So as I mentioned, we have some individuals who are new to us at Marshall Reddick Real Estate. So I wanted to start out by letting you know a little bit more about what we do. So we are a licensed residential real estate broker in California. So we help clients buy and sell locally in California. Now our niche is residential investment properties throughout the U.S., whether it be here in California or other markets like Phoenix. And the reasons we're in specific markets are all tailored to you as the investor. All the markets we're in are very affordable, have steady job growth, there's a lot of economic diversity, solid returns, and then we also pick the states where it's landlord friendly, which is huge. Along with that, we are also a licensed mortgage and property manager here in Southern California. So, a little bit about me. Oh, hold on, sorry about that. Like I mentioned earlier, I am a licensed real estate agent and realtor here in California. I graduated from the University of Arizona with a degree in economics, so I love doing the presentation here in Phoenix. Kind of like my second home over there. But even though Arizona's in Tucson, Arizona as a state is a second home to me for sure. So I got into real estate just through the influence of family members. Both my grandparents were realtors in California, and my uncle does a lot of private money lending. So both of those influence and spheres is exactly what we do here at Marshall Reddick. So it almost made perfect sense for me to join this company, and start from everything that I've learned from both of those, both sides of the family. Before this, though, I was a financial advisor for 3 years. So on a daily basis, I would help clients with their investment goals, their needs, get a plan going. What I realized since joining Marshall Reddick is it doesn't matter if it's, we're talking about a 401k or investment property, you all have to have the same process. You have to understand the client, you have to understand the goals and the needs to make a solid, educated decision. So when I'm not working, usually on Sundays, I like to play golf during the summertime and in the wintertime, since it is Southern California. I love snowboarding and I love being outdoors, so I surf. So enough about me, and we can continue on here. So big question, why work with an advisor? Probably the biggest and best reason I can give clients is we don't charge you anything. We believe instead of paying us a fee, you should use that money that you would be paying us and put that into your investment properties and real estate investments. I'm very flexible, so I'm here pretty much from 8 to 8, Monday through Friday, and sometimes Saturday. Each person or each client that I deal with is different, whether their work schedules are different, so contacting me over the phone or in person, email, text, whatever it is, I can accommodate you. So whatever works for you is going to be great. Like I mentioned earlier, whether this is your first time buying a property or this is your 10th property you're buying, it doesn't matter. I work with every single person in between that. So you are not alone and you don't have to feel like you're the only person in that boat. Going back to what I did prior to this, financial advising, we customize a plan that fits you. Not every client's the same. Not every client can have the same interests, desires for, specific properties. And we're all going to have different investment goals. So I customize the plan that fits you and your family best. And again, I am the person that walks you through this entire process from start to finish, from the first time that we communicate to the time that you essentially sign on those dots to get the property. I will be here assisting you and walking you through that process, making you feel very comfortable. So some of the things that we do here are the most important things that I do here to help this initially start off with you is essentially setting your real estate investing criteria. There are 6 main key bullet points to this. So whether you're looking for income or long-term wealth, so cash flow or appreciation, which is a market that Phoenix tailors to, is the appreciation market. When are you looking to retire? You're looking to retire in 30 years, or you're looking to retire in 5 years. That's all going to have a big influence and impact as far as what market you should be looking in. How much experience you have with real estate. Like I said, it doesn't matter how much real estate experience you have. That's what I'm here for, so I can easily help you through that process. And again, what's your risk tolerance? Are you someone that doesn't like, the big ups and downs in the market, or are you someone who has a lot of risk tolerance and can, endure some of the market changes over the next 10, 15, 20 years? Also, can you qualify for financing? So conventional financing, can you qualify for that, putting 20 or 25% down? If not, we do have other options here, like I mentioned with our private lending. We can definitely talk about at a later time. And again, it comes down to what you can afford. So at the very end of this presentation, I'm just going to hit briefly on one of our lenders who we've been working with for over 10 years, Reed Hazard, who does a lot of pre-qualifying for our clients. And that's a great first place to start. So we have a good understanding of where we are as far as what we can afford, what we can't afford. And underneath this is the property rating that Marshall Reddick determines. So I will talk about this in a little bit later, but essentially we classify properties everywhere from luxury A, B, C, and D class. And as you can see, luxury to D class, or luxury to A, is more appreciation you'll see over the course of 10, 15, 20 years, the long term. And as you get to the C and D class, we're looking at a lot more cash flow with a lower purchase price. So you can see the differences between the luxury and D class. A abbreviated as appreciation, B has a little bit of both, and then C is cash flow. So to get a better understanding of how we come up with the luxury A, B, and C, D ratings, it's under our property class ebook. So you can find that going to our website, going under Invest, and you can download the PDF, which is about a 20-minute read. It's a great understanding of a layout, very visual of how we come up with those figures, which is going to be a huge component as far as where to start off as finding your investment property. All right, time for our first poll question. Sorry to kind of just drop this on you, but we do have 2 of these throughout the presentation. These are all anonymous. We're not going to post these on the website of who posted what. So I would like to first start off with the first poll question. second. That one right there. All right, so what is your target property class? Fill that in when you can. I'll give you guys about 15 or 20 seconds. Either are you looking for A class, B class, or C class? I know we mentioned luxury class and D class, but we do not offer any of those Marshall Reddick, because with just a kind of a very short summary, luxury class, you don't get nearly as much cash flow as you like, or return on your investment, unless you're putting 60, 70% down. And then D class is just a little bit too risky for our investors, so we steer clear of the luxury and D class. So, and then B class, we have a mixture of both, like I said earlier, and then C class is for high cash flow, and then D, if you're not sure yet, that's totally fine. That's what we're here to help you guys figure out. Okay, just finishing up here, another couple seconds. All right. All right. We have, let's expand this here. We have about 54% as a mixture of A and C, and then we have some C class here for high cash flow. And a few of those who aren't sure yet, which is totally fine. Phoenix is a great place to start, though, for anyone that's looking for appreciation. So Phoenix is one of our best markets for appreciation in the long term. All right. Okay, so how to choose where to invest. So again, what I covered a little bit earlier was we're in specific markets for specific reasons. We've done our research, we know why we're in there, and we have the facts to back it up. Specifically, why we're in Phoenix is it's got a strong job market. Job markets bring in more people for rental rates, strong rental rate demand, which is going to decrease vacancy. There's a strong economic diversity within Phoenix. So what I mean by that is you don't just have one industry, one that's taking over the entire, city essentially. It's not just agriculture. It's not just tech. There's a whole economic diversity as far as jobs. Housing affordability is very, very low compared to California. So I'm not sure if most of you guys are from California, but I'm sure you know that it's hard to purchase not just a first-time home here in California, but also, investment property here as well. So it's a great place to begin. Strong education. We do look for places within the city that do have great education systems from elementary, middle, and high school. And then also a very good property management, which Tanya can get into in a second here as well. All right, so Arizona, was the Grand Canyon, now it's the Grand Real Estate. So I want to introduce Tanya Nord. She's actually we've been working with her for about 4 years now. She is a Arizona native, and we've both sold over 100 properties. She is a realtor and also is a property manager. So it's all under one roof with her, and she actually manages our Vice President Scott's and his brother's property in Phoenix. So Tanya, you want to start here?
Sure. Thank you, Garrett. Can everybody hear me okay? Yeah. All right. So hello to everybody. I see there's a lot of people on tonight, so I'm super excited that everyone's interested in the Phoenix market. I think there's some familiar people that may be listening to that I work with over the years and some new ones. So let's go ahead and get started. A little bit, why are we all here today? I think Garrett touched on a lot of that already. Whether you're a seasoned investor or just starting out, I think it's pretty safe to say that we're all here for basically the same reasons. We want financial independence. We want to build wealth so that we can have a successful retirement, maybe leave a legacy to pass down to our family. Some even use it as a way to consider a college fund for their children or their grandchildren. I have a few investors that's why they buy. Basically, no matter what your reason is for wanting to get into the investment market, I'm sure it's because you either have heard or already know, hopefully, that real estate is the key to building that wealth. Most millionaires have gotten their wealth through real estate, whether it's residential or commercial. Like any investment, there's lots of ups and downs, but real estate overall stands to provide the highest returns, the greatest value, and the least risk. This is a little bit about me. You can see my family down in the corner. I've got 2 kids, so when I'm not at work, my hands are pretty full at home. My daughter is 6 years old and my son is 10. I have been with Arizona Equity since 2011, and I actually recently became the designated broker this past December. We're kind of a smaller company. We wear a lot of hats, which has been really good. I've gotten a wide range of experience in the different aspects, mainly dealing with investments and investors. I work a lot in acquisitions, listing and selling when needed, anything to do with property management. As you said, I also do all of our property management. So I'm experienced with leasing, advertising, background checks, owner disbursements. I'm the lucky one doing the HOAs, handling maintenance requests, eviction process, a little bit of everything. And this is Tony, or Anthony Thomas, if you want to be formal. He's the owner of our company. He has been in investments for a long time. He was a registered investment advisor and registered principal for over 30 years. He held numerous security licenses and managed over $100 million in assets. He's actually been in the Arizona market since 2005. And again, he's the owner. He kind of oversees all the finance and business operations, as well as our company acquisitions, makes the final decision on what we're going to buy as a company. Basically, when he started, he got into it and he created this investment company built by investors for investors. So we'll get into that a little bit more once I talk about Arizona Equity Properties. We're going to talk about our services, reasons you should probably invest in the Phoenix market, some of our statistics, some properties that are available, and why it's really important to be acting now and not later. We are a boutique real estate investment company and a brokerage. Our company over the years has acquired and sold over 1,000 houses throughout Arizona. Like I said, we're built by investors for investors. We started back in, let's say, 2009. There was an abundance of distressed properties. We bought them, rehabbed them, rented, and sold directly to investors. And then we would, of course, offer to manage them so that we can keep it all in one place and be turnkey. When we started with Marshall Reddick back in 2012, I believe it was, we still had a pool of properties that we could personally have for Marshall Reddick investors, which was very nice to have. Things have changed over the years a little bit, making it a little harder to do the buy and flip scenario. So we've kind of changed with the market. As a company, we are still buying investments, so we're still in that game. However, we're doing more towards end users. But I still work with all the investors, and I help them buy properties off the MLS. And then I can coordinate rehab if needed, of course, do the marketing, get the renters in there, and then manage the property if they need it. So again, we help analyze, acquire, we rehab, advertise, rent, manage. We do it all. Or I should say I do it all. Property management. We do not really advertise that we're property management. We like to keep ourselves more geared towards investors we're working with and helping them find properties. We work with a lot of Marshall Reddick investors. We, of course, do marketing on all of our major websites and the MLS. Pretty much anywhere you can have a property. We'll even do Craigslist, Backpage, pretty much anywhere to get the most viewings. Tenant screening, we do a nationwide check. We check the criminal, credit, income, employment, and of course evictions. We do collection and retention of the security deposits. We'll hold on to that until they move out and properly disperse it as needed. We do have a very nice online portal for both tenants and owners. So our portal, the tenants can pay their rent, they can submit maintenance requests, communicate with us, and then as well for the owners, they can view their financials whenever they want. They can check on the maintenance, and they can also look at their own reporting. However, we do also send a monthly email and then a yearly one at the end of the year. And then we, of course, do rent disbursements, which I can either send you a check or I can also do a direct deposit, which is the most common. We'll then help set up the 1099 preparation. We do internal and external property inspections about every 6 months. And we can also handle the remodel and repair services on a regular basis. And in the event we get the bad situation where we got to evict someone, which is very rare, we can handle that for you. We do not upcharge for that. It's included with our management fee. We just pass the bill to the lawyer straight through to you, which brings me to the last point. We don't upcharge anything. We pass all charges right towards you. Our handymen usually call us, say from Home Depot, when we pay for the materials ourselves to avoid any kind of upcharging on their part. Try to keep our charges down as low as possible. We've got a pretty good pool of vendors we work with. We've worked with for years, very reliable, honest, well-priced, but also good quality. All right, so Marshall Reddick client discounts. We like to give them a little bit of a discount. We kind of do 30% off of all of our startup fees. We normally charge $250 for the basic startup account fee. We discount it to $175. A one-time advertising fee, it doesn't get charged every time it goes vacant. We're doing $175, which is again discounted by 30%. We do ask for a reserve fund of $500 per property, but if you have more than one property with us, we don't exceed $1,000 in your account at one time. And one thing that's great is we do a flat management fee. A lot of people do 8 or 10% of the monthly rent, but we do flat $70 no matter what. And another thing, leasing fee, $500 flat. Again, most people do a percentage of the annual rent. So it keeps it very, no matter how high your rent goes, it's just at $500. And then the 3-month guarantee on any tenant we place. If they, for some reason, fail within the first 3 months, have to be evicted or bail on the lease, we will do our best to get it re-rented as fast as possible without charging you anything. All right. So this is one of our beautiful sunsets. And so now we are going to get into the Phoenix market. Phoenix has always stayed one of the fastest growing cities in the nation. It's always in the top 10, if not the top 5. Our population is constantly increasing. We are the 7th largest this past year, and we expect to grow another 42% in 10 years. That's huge. And they say that we're rated number 2 as one of the best places to live for big city bargains. Livability is pretty affordable here compared to any other big city. It makes it very desirable for people to live here. We have a lot of economy that's building and growing, a lot of jobs. As you can see, our unemployment rate has gone down a few points from last year, and it's continuing to go down. And appreciation. Phoenix is really more of an appreciation market. It's not as big of a cash flow like it once was, but we constantly have appreciation. It's going to keep going up. Lots of jobs coming here, lots of companies bringing their productions here, and it makes it, we have great weather, which brings me to my next slide. It's sunny 88% of the time. Lots of people love that we have pretty constant weather. It does get a little hot, but you can get through those few months. It's pretty beautiful the rest of the year. We've got high quality housing. There are some areas that you've got some of the older neighborhoods and older houses. A lot of them are being rehabbed, if not torn down and rebuilt. But basically, low property taxes and affordable home prices make the livability really high here. And then professional opportunities. Again, we've got large companies here, many of them and many more coming. We've got Intel down in Chandler. We got Amex. Banner Health is huge here. Motorola, Microchip, and the list can just go on and on. And we have quite the abundance of different activities, whether it's outdoors, indoors, great entertainment, nightlife, lots of different types of restaurants. It's definitely a place that people can get a lot of different diverse types of situations, whether you want to go out in a more relaxed state or party like you're in Las Vegas. definitely lots for families and people of all different genres. And let me see here where I'm at. Before I get into the business facts, I do want to kind of touch on education. A big thing that we got here that a lot of people get a little surprised about is we have open enrollment in a lot of our schools. Education is huge, obviously, for families and desirability. And if for some reason the house you are living in doesn't have the best school that's tied to it, a lot of people will drive the extra mile or 10 miles, whatever it may be, to put them at the school that matters most to them. I know people that drive from West Phoenix, which is Peoria, all the way into Central North Phoenix, where my kids go to school, just because they want to go to that school and that school district. We have over 24 high schools that are actually nationally ranked. So lots of really great schools. A lot of them are down in Chandler. We've got ASU here, which is a great university. It's one of the largest ones in the nation. We also are home to the internationally renowned Thunderbird School of Global Management and a lot of other technical training schools here. Technology is pretty big. And we also got University of Phoenix, which is the largest private university in the nation. So lots of education. There's many more to list, but I won't bore you with all of that. Another thing is we got really easy commuting. It has to do with more of the livability. Easy to get around, easy to become ingrained in the community. Great transportation. We have the bus, the light rail, which is still being added to. Lots of construction, but it's going to be awesome when it gets done. You can pretty much get anywhere you need to get to within, say, 30 minutes or so. So that's really big. All right, so now on to business. Again, Arizona is one of the best states for manufacturing as well as other businesses. We have a lot of different manufacturers here, such as Amazon. We got eBay, Intel, like I said earlier, and we've got a lot more coming. I know I read recently that SK Food Group said that they're going to come and bring their operations here. That's going to be like a 212,000 square foot facility in Tolleson, and that should create about 600 more jobs. And a fun little tidbit is we got faster internet speeds than California, Colorado, Texas, New Mexico, Utah, and Nevada. Technology is really big here, and it's continuing to get big. Software and IT industry job growth is projected to increase 25% over the next decade compared to 18% nationally. Again, more is by technology. Got 32% more computer science, software, and engineering professionals in Austin. And let's see. So again, our economic growth is huge. We have a lot of corporate and regional headquarters here. I think I already mentioned Amazon. We got GoDaddy, PetSmart, Microchip, U-Haul, Shamrock Farms. Some of our top employers, we've got the state of Arizona. Walmart's huge, got over 30,000 employees. Banner Health, 24,000 employees. Lots of jobs here. They're constantly increasing. Every time I turn around, there's more and more companies stating that they're coming here. The weather's predictable. We have a lot of solar energy type companies that are coming here because we have an abundance of sun and they can do their research. Low on natural disasters, so it makes it very stable for technology type companies that need secure situations. Now the housing market. So the cost of living is 77% cheaper on average than California. That's pretty huge. This graph is a neat little graph to kind of tell you how to read it. It's compared to the United States as a whole. And everywhere that it's lower than 100, that's where it's cheaper to be in Arizona than it is the United States. Now there's a couple that are a little bit higher, but for the most part, Arizona is definitely cheaper than the majority of the United States to live in. Now down to the bottom where it says home owned in Phoenix is about 48, 49%, and then you got homes rented about 37%. Now this vacant number, it says 13.8%, but that is a very wide range. It's, I think, pretty much all of Phoenix, all the properties. It's not necessarily single family homes. and it's also not necessarily, it's including areas that we don't even offer. We don't really go into certain subdivisions, certain zip codes because of the neighborhood that it may be, or it's not constantly rented. So we're more choosy with where we choose to have people invest, where we suggest they invest. My personal vacancy rate is very low to none. I'd say at the most maybe 3 to 4%. Right now the market is very strong for rentals. I have a hard time keeping anything vacant. Even when I know a property is going to be coming up for end of a lease, I list it within the last 30 days, and it's very rare that it's not already rented before it's already vacant. Even if I know I got a few things I'm going to need to do on work, those people are waiting. It's very, very big right now. That's why I really want to get more investors buying out here. It might not be as big a cash flow as some other areas, but the rental market is strong. We need more rentals. That's the advantage I have being the property manager. I see that part of it. So I definitely need to get some more properties in that I can offer, because I don't have enough properties to handle everybody. Now this graph was from the National Association of Realtors, and it kind of shows a 25-year history of the median home prices in Phoenix. The biggest part about this is, if you see over here, this kind of shows the appreciation trend over 25 years. For the most part, it was constantly going in an upward manner. Very few years where there was a decrease. And as you can see, we still have quite a bit of room to get some appreciation before we even max out where we were in 2006. Now the detailed market data packet. Marshall Reddick has put together this great packet, and Garrett will talk about it a little bit at the end. Everyone will get an opportunity to find out how they can get a free copy, so make sure you stay tuned for that. Now I did go through and I did a lot of work. Properties are flying off the market pretty fast out here, so I'm constantly researching, seeing what's new, what's going off the market that I was previously advertising. So I did handpick these properties. I was doing some even just a few hours ago, trying to make sure I had the most updated information. So we're going to go over a few properties that I found. This is a great property in Chandler. It is already rented, which is awesome. It has had some recent updates, and there has been a new lease that was signed in May of this year for 2 years. So all the way through May 2018, you got tenants that are paying $11.95 a month, plus they pay tax. Amazing area. It's North Chandler neighborhood, but it's one of the neighborhoods that has no HOA, which is awesome. You don't got to worry about that extra expense. Very high-rated schools. The thing about Chandler is they put a lot of money into their schools. They got great sports offered for kids. I know I personally want to move into the Chandler area by the time my son gets into high school, more for the sports end of everything in the schools out there. You don't have to pay for a private school out there because they're all pretty great in the public schools. And Chandler is about, if you're not familiar with it, it is kind of the southeast area. It's about 30 minutes from Central Phoenix. It's home of Intel, which is one of the huge manufacturers out there. And this property doesn't have a garage, but it does have the carport, which is pretty normal for this area of Chandler. It's to be expected. If you can see over here, the list price is $175, which is awesome for a house out in Chandler. And the rent again is $11.95. And a little bit about these numbers. There is your monthly income, which is generally about how much you're going to take home monthly. This number down here is with them adding in and annualizing the fact that there's maintenance, vacancy, leasing fees, things like that. So this is just kind of an idea number, but this should be more about what you see monthly after paying your mortgage payment and any HOAs if there are one, or taxes, management fees, things like that. As you can see here, your ROI is almost 16%, which is awesome. That's a great return on investment, and you're still cash flowing. So it's definitely a great property. I was excited when I saw this one, and I think it's going to go fast. All right. So now we got a property out in Mesa. This is definitely East Mesa, so it's going to be way out east, kind of centralized, but definitely farther out east. A lot of newer communities out there. This house was built in 2000, which is awesome. That shouldn't need a whole lot of maintenance. Great investment opportunity. You can see your ROI is about 14%, and again, we're cash flowing over here. This one's listed at $179,500, which is a really good property price out here in Mesa, especially for a property that was built in 2000. As you can see, it's got new paint, carpet, newer appliances, so there shouldn't be a whole lot of expenses as far as when you first buy it. We do put in a little bit of money in there just to kind of, in case anything comes up during inspection you might want to address. But it should be really ready to list for lease and get it rented right away because it is currently vacant. I have kind of figured, based on running comps, since I'm also the property manager, that I could probably pull about $1,200. That's a pretty conservative number. I'm happy to try to get more, obviously, but I didn't want to get your hopes up too high. This other one is in Mesa also. Again, you're in the East Valley, really great communities, newer communities, better schools. I didn't really touch much on Mesa at first, but Mesa is very desirable. It's the third largest city in Arizona. You got the Mesa Airport, good schools. They've got downtown Mesa is pretty awesome. It's got some neat museums, art museums, kind of like a downtown Tempe situation if you're familiar with Arizona at all, but got a little different vibe to it. This one itself is vacant again, and it was built in 1993, but it's got very high-rated schools. It's definitely close to all the major freeways. You got 3 golf courses nearby, and this one does have an HOA. However, the HOA does have a community pool and a playground, which is great for your tenants. You don't got to worry about the upkeep of the pool, but tenants can take advantage of it, and in Arizona, you love having a pool. But the HOA still is only $58, and it's got a pool, which is an awesome price, so I was pretty surprised by that. This one is listed at $180, so slightly more, and I'm thinking, again, I can pull about $1,200. Can probably pull more, but I want to be conservative. Here you can see your monthly income. Again, we've got cash flow and a return on our investment still, about 14.5% return on your investment. So again, another great property, great potential. Now we are going to also show you a couple of multifamily properties. This is a very rare find. This is a duplex, and they've got individual attached garages, which is very rare. Most multifamily units are a little bit older. As you can see, this was built in 1963. The current owner actually has been upkeeping the property really well. He lives in one of the units, and he's actually willing to stay for at least 12 months at $875. The other unit is already rented at $875, so again, rented already, shouldn't have to really do much. He's been taking great care of the property. Both properties have their own private backyard, and it's a block wall. So very private, again, very rare, very close to the I-17 and Metro Center. This one is kind of more of a central Phoenix, slightly getting into the West Valley, very convenient locations, lots of jobs, very popular area. I doubt it is vacant much at all. So this one's listed at $179, which is an awesome price. You can see that between the two properties, you're getting about $1,750 in rent. There's no HOA, which is amazing. Landscaping, the current owner's been doing the landscaping, so they didn't really have an exact number, but I'm figuring maybe about $50 a month just to kind of upkeep the property. And you can see here, it's like $700 cash flow, which is awesome. And then you still got your nice return on investment of 13.25%. So I definitely think this is a great property. Oh, and real quick, the owner has actually done some updating to Unit A. He's updated the electrical and plumbing as well as cosmetics. He's in Unit B. He likes things more classic. The unit still is in great shape, and he's updated the plumbing, but other than that, he hasn't done any major cosmetic changes to it. All right, so this is a fourplex. This is one of the kitchens inside. You can see they've kind of done some updating. This is a wonderful investment opportunity. They recently actually reduced the price by $20,000. All of them are rented, so you shouldn't have to do much of anything when you first buy it. I doubt that they go vacant or stay vacant very long. It's in a high demand area. Again, we're back in the Mesa area. This is more central Mesa. We're near the downtown Mesa, next to some new redevelopments, schools and colleges. The Mesa Art Center that I was talking about earlier, which is new. It's huge and very popular. They've all been updated, so all of them are pretty similar. Right now they're all currently on a month-to-month, but we may be able to get them to sign a lease. Again, even if one of them moved out, I don't think it'd be hard to rent these at all. And then 2 of them actually did renew their lease in February. So this one is listed for $363,500. So we're getting a little bit higher, but we want to make sure we're in the better areas. It was built in 1940, which is older, but again, when you're in these multifamily properties, a lot of them are older. They don't really build a whole lot of new ones in this situation. They're doing more of these big apartment complexes. But they have been doing updating a lot over the last few years. So here, between the 4 properties, you're going to look at about $3,000 in rent, just under. And your monthly income that you should take away in general is about $1,200, a little over $1,200. So cash flow, again, which is awesome, and you got a good return on investment of about 13%. All right, so it's time for poll number 2. So get ready, and Garrett's going to let you know what that is.
Awesome. Thanks, Tanya. All right, guys, poll number 2. I'm going to pull that up right now. And here we go. So these are all in order from the properties that Tanya had gone over. So, you know, which property did you like the best? I know it's hard to choose just one, but just for our sake and fun, we'd like to see what you guys chose here. So I'll give you a couple seconds to choose which ones you like the best. Okay, just about another 5 or 10 seconds here. We got almost everyone completed that. All right, 3, 2, and 1. Here we go, and here is what we chose. And I love seeing results like these because there's a little bit of everything, which goes back to not everyone's the same investor, and we're all looking for different things. So cool to see that everything has been selected. So
that's awesome.
Yeah. All right.
All right, so we're going to touch on why you should buy now. Again, prices are going up. Appreciation is still there. We still got room for growth, so you want to get in so you can capitalize on that gain before we so you want to buy now. If you're not cash flowing a whole lot, at least your tenants are paying your mortgage payment if you use mortgage, but you're still going to get that appreciation. You're also going to be getting the equity as you pay your mortgage. You're also doing, you know, your own little savings plan right there. Interest rates are just going to continue to rise. There's still pretty good rates out there, so if you do need to do the conventional financing, it's still a great time to do that. And good properties are harder and harder to find. As you can see, the price points are getting a little bit higher, but there's still some cash flows there, but it's going to keep getting harder and harder. And the economy is in full back force. You know, there's very few foreclosures of distressed properties, which is why us as a company had to kind of alter the way that we're doing business just for us personally. But I still have much demand for rental properties. I really want to get some more investors out here, get some great investment properties, let me rent them for them, keep them rented. Again, I work on both ends. I know all of my owners. I know all of my tenants. I am the direct contact. So I do wear a lot of hats, but it's very mom and pop. Everybody knows me. I know them. I have a lot of tenants that actually will come back after they left our management and see if we have any available properties because they wanted to be with our management again. I've had multiple owners bring me some of their other properties because they were so happy with the ones that we were renting for them originally. So I need some investors back out here. I need people to still buy while we got time, still appreciation. great economy. And we'll give it back to Garrett.
Awesome. Thank you, Tanya, for that. So earlier on in the presentation, I talked a little bit about, finding the right lender and, getting pre-approved. So this is a crucial part of, investing and purchasing your investment property, making sure that we're taking the right and necessary steps to do that. So after your consultation with me, one of the things that I'm going to be asking you is if you've been pre-approved or not. If you have not, that's totally fine, but we do work with Reed Hazard over at AmeriFirst Financial, who's down in San Clemente here, about 20-30 minutes south of us here. So Reed Hazard is one of our direct lenders. So they do everything in-house. It's all in-house processing and underwriting all under one roof. Now, like I said earlier, we've been working with Reed for about 10 years now, and the reason for that is just how fast and punctual he is with getting back to not just clients but us as well, doing his due diligence and making sure he's collecting all the necessary documentation from clients to get you the most accurate reading of what you can afford going forward. So here is Reed's information, and again, as being the real estate advisor, I am in contact with Reed, with realtors like Tanya. So I am the middleman, always keeping you informed and contacting whoever I need to make sure everything is getting done properly. So again, once we get you in touch with Reed, he'll go over all the promotions with you. AmeriFirst Financial does actually pay for your appraisal, up to $450 if you are going through Marshall Reddick. So a great incentive for those out there looking to purchase in the near future. Again, this is kind of we're finishing up here, but I want to let you guys know I'm available. So there's a box that you guys can start typing in. I would love to answer all the questions you have throughout this presentation, go over the numbers with you in a little bit more detail as the advisor. And again, Tanya is the buyer's agent, so she can find property anywhere in Arizona. She's not just limited to the properties that we showed you right now and just on our website. So if you see something out there, she can definitely help you find that. So again, in the box, if you want to type in your name and best time and date where I can contact you, or we can schedule a consultation, I'd love to do that. So when you get a chance, please do so. And then earlier, we talked about the Phoenix market data report, and I can send you one if you would like. Just let me know, and I will do that as soon as possible. So again, my name is Garrett Stason. I'm a real estate advisor here at Marshall Reddick. I am very happy to help you guys out anytime. So if you're looking for properties elsewhere in the U.S., I can definitely get you in contact with those people. But Tanya is one of our best agents out in Arizona, so we can definitely get you in contact with her. So Tanya, did you have anything else that you'd like to mention before we head out here?
I can't really think anything off the top of my head other than, I'm here to help. If you got any questions, feel free to come my way. They'll give you my information, and I'm happy to help with anything that I can, find you properties. If none of these really appeal to you, I can go within whatever you're looking for and let you know what there is. I can send you listings, and I'll help you find the right property.
Exactly. Perfect. Thanks again, Tanya. And again, we're here to help, so use us. We're here as a free resource for you. And then, yeah, we can definitely get together later on. And then anything else you guys have a great night, and we will hopefully see you next time. Thanks, Tanya.
Good night, everybody. Thanks.